welcome to the WARR Hunt quarterly investment update to 31 March 2022. Now Steve, there's been some interesting themes over the last quarter, and particularly around expectations with interest rates, the war in Ukraine, and on everyone's lips, what's happening with inflation. How's that actually panned out for markets within Australia?
Yeah, let's have a look at the Australian stock market, Sam. And first of all, the bottom line I've got in this chart is the volatility, and you can see that things have been pretty benign until this quarter, and suddenly volatility's picked up, and so the market's gone up and down. Now, it started off actually on January the 1st, where the market really went down, almost into correction territory, down by about 10%. But then you can see it started to come up again. Then Russia moved into Ukraine, market goes down again. And then on March the 16th, the US Feds raised the interest rate by 0.25%, something that the market had been fearful of, but in fact, when they did do that, markets both in Australia and around the world went up. So in the end, Australia returned a positive 2.2% for the quarter.
It's interesting. I think most people would anticipate that the quarter was negative for Australian markets, but to actually hear that it's positive is good news from that side. Those three sort of themes around inflation, interest rates, and the Ukraine, what's that meant for global markets?
Yeah, well, Australia has defied gravity in a way, as you can see, Sam. It's positive by 2.2%. Every other of the markets, the developed markets and the emerging markets, are all negative for the quarter. And that again has got to do with inflation, the fear of interest rates, future interest rates, and the war in Ukraine, which obviously has a bigger effect, particularly in Europe, than it would in Australia.
The other half of the equation, we always talk about equity markets, but what's happened globally for fixed interest?
That's not such a great story, Sam. If you think that the equity market's been on a roller coaster with ups and downs and ups, well, then it's been the Tower of Terror ride in fixed interest. And again, you can see in the chart we've got up now, you can see yields rising in the last 6 months. And when yields go up, bond prices go down. So you can see the last 2 quarters have been negative. Overall, the whole year is negative. Sam, it's been the worst quarterly return in bonds on record.
And there is that inverse relationship between a bond's price and its face value or its yield. I think it's probably worthwhile just doing a quick recap on the WARR Hunt investment philosophy, or how we invest clients' portfolios. Really, there's 3 things that we focus on in terms of equities, and that really is weighting clients' portfolios towards equities or the share market, as we expect that will generate a higher return than bonds over the long term. The other sort of factors that we look at are tilting the portfolios towards smaller companies as opposed to large, and value companies as opposed to growth. So with those factors in mind, Steve, how's that actually panned out?
Yes, Sam, well, it's actually been a phenomenal quarter for that value premium, because at the start of the quarter, the big fall came from the high growth tech stocks. On the other hand, small caps always tend to get hit a little bit harder when there's some uncertainty in the market.
Thanks, Steve, for that update, and thank you for joining us for this presentation. Certainly get in contact if there's anything you wish to discuss. Otherwise, we look forward to catching up with you at the next quarterly market update. Thank you.